It's November, and we've got another real estate market update for you for Austin, Texas. The election's behind us. Did that remove the uncertainty to allow us to have a direction of where this market is going? We're going to talk about that. And I want to start with a quick shortcut to get back to our YouTube channel if you need to, realestatevideohub.com to find all of our videos. And of course, we're the Shapiro group here in Austin, Texas. Myself, David Shapiro, and my colleague, Lee Abraham. And if you're thinking about buying or selling and you're just not sure, maybe it's even a year down the road, something you want to start planning for, I encourage you to reach out to us so we can start planning in advance. We'd love to start building those relationships early. And we're all about building long-term relationships. We're here for our clients, even outside of the deals they're doing, but throughout their career in or their time in owning real estate or thinking about owning real estate even. So let's look at the November active listings. They're down to 2,800. So what I think you'll see is pretty interesting is as we look at the next chart here, and we start getting into the monthly housing inventory. So you can't just look at supply in a vacuum. You have to also look at the demand. So Lee, if you want to talk a little bit about this slide.
Yeah, I mean, the interesting thing here, David, you mentioned that starting the month with just over 2,800 listings. We look at how many of those listings are selling per month. If we look at pending sales, there were 646 in the last 30 days. That would give us about a 4.3 month inventory. If you look at the closed sales from the past month, a lower number, 602, translates to 4.6 months inventory. David, we've got about a 4.5 month inventory any way you slice it, and technically still a seller's market. Balanced market, 6.5 month inventory. We're below that. And it's a seller's market when you look at the numbers.
And then, of course, we'll remind you that it's always hyper local. And so we have buyers right now. We had one that closed today, got a phenomenal deal on a property in Travis Heights. And so there's lots of opportunities for buyers out there, even though it's technically a seller's market. And you'll see that as we look at some of the stats where the days on market are creeping up, and especially professional sellers. Like if you're a builder or somebody, you want to move the property. It's more important to just move on, get it sold, and that can equal a really good deal for a buyer. And so here you'll see over time what this 30-day monthly housing inventory has looked like. So this goes back to the really hot times, which, I still think people have in their mind that this is what the market is like, or it was like this not that long ago, but now we're, how many Novembers ago was this? So this is like almost 3 years ago, right? So this was January of 2022. So that's when things in the summer started increasing the amount of inventory. Usually it peaks around the fall into the winter, right? So again, here, November, January, those were peaks. But if you look, we're in November and it's actually coming down from the summer, which is really interesting.
One of the key stats that is always interesting to look at is the number of sales per month. And we've been looking at a downward trend for quite some time. We finally got a little bit of year over year increase, David. Marginal, granted, but do the math and you're up 0.2% year over year. One sale technically higher than this time last year, and a nice increase as compared to the previous month. It's good to see. Even though it's marginal, it's an indicator of demand remaining in place, at least maybe strengthening a little bit, and that's good for the market.
Yeah, I mean, you can see we're nowhere. This is feeling a bit abnormal, although it's maybe more normal than what we were seeing with pricing in 2021. But if you go back to October of 2019, 1,000 sales, like that's what we would call a normal. So we're 40+% below what we should be seeing for the number of transactions that are happening. So just less people are willing to sell, less people are willing to buy, partly because of interest rates, partly because of election uncertainty. Now that's behind us, the election has happened. But my theory on it is it doesn't feel like it's changing abruptly. I think people still want to wait until, past the holidays, into the new year, see once the new president's actually in office, what starts happening. Maybe interest rates come down. I don't foresee that, it doesn't look like interest rates are going to come down all that fast. So it's hard to know what's going to happen. Maybe Trump will have a plan. What I would like to see is that he incentivizes builders to build. So if there's some way to do that to create more inventory, so that way, I mean, prices have held stable. I don't think we have an issue with pricing going down. We have an issue potentially that pricing might go up because supply is so low and we're so constrained. So we definitely need to encourage builders to keep building nationwide, not just in Austin. And so here you can look at average sale price. So month over month, it's up 4.7% from 773 to 809, which is generally the trend. It's generally going up from September to October, so that's normal. And then it's up year over year, so that's good to see as well. I think people just keep thinking that, like, oh man, prices are down so much in Austin, but they're really not. Really, prices are doing pretty good, especially you look back to we're we're still quite a bit above 2021 levels, and really not that far below the peak of 2022 and the year over year basis. So I think pricing's doing pretty well, holding up strong. And it's that dynamic of people don't really want to sell right now. They've got these long term fixed rate mortgages, and demand is also a little bit depressed because people don't want to buy with high interest rates. So I think that once that unlocks, it'll probably unlock unevenly. And so what's going to change is the number of transactions. That's really what's going to change in the future, is how many available homes there are, the speed of the market, the pricing. Unlikely that we're going to see a big dip in pricing because more supply becomes available because more buyers are going to hit the market at the same time.
Yeah, I think one of the key things, David, that is underlying what you're discussing there is which driver, supply or demand, is more nimble. Well, demand. Demand is a more nimble driver than supply. Buyers can typically move faster than sellers. And so what that basically creates is a dynamic for a period of rapid price appreciation as supply attempts to increase to match rapidly rising demand. And so if things fall into place with the new administration and all the other variables, that there is a potential formula here that I can see in the numbers where we may have a nice spurt of equity gain value appreciation in the end of Q1, Q2. It kind of depends, but I can see that more of a possibility now than maybe in our past couple of reports.
Yeah, I think, the bottom's in for the residential real estate market. Like, I can't see why it would go lower than what it's done. The pricing is held up really well. And we're just waiting for demand to pick back up, and then pricing should pick back up. I mean, there's no reason why we can't go back to somewhere in the 5 to 8% range of appreciation that Austin has historically seen. So, I think people are going to be surprised to see how much demand is out there waiting. And the key is that Austin continues to add jobs. Like, this is still a place that employers want to be. They're moving their jobs here, and therefore people move here, and the city continues to grow. New listings are up year over year and down month to month. And so we'll get to the barometer. I think it'll tell the story a little bit better here.
Sale price, list price ratio. This is the sobering statistic in this analysis where it's off, 0.6% year over year, month to month, same figure. And it is a remarkably insightful indicator, which is basically saying that, yeah, the sentiment is still on the sideline in terms of where we're at with this market. I think this is going to be interesting to watch here, particularly in Q1. I see this turning around a bit and moving back towards higher numbers.
And Lee, would you say, very stable?
Oh, yeah. I mean, 96 point whatever percent, 96.4%. It's a pretty stable number, David. I mean, you're talking about very, small percentages of movement in a negotiation process. So I do see stability here. But my point is that it's flavored a little bit with a tempered enthusiasm, and
Yeah.
it's down a little bit.
I want to point out, like, the stability of this tempered enthusiasm. We're like 98% back in September of 2022, and it's fluctuated anywhere between there and 96.4%, right? So it hasn't really moved all that much, less than 2 percentage points over a 2 year period. And if you look at what it looked like coming down, I mean, it was 106, 107, and then all of a sudden it's 97%, right? So that's a big change, right?
Right.
Stability is this.
Right.
Here's some big fluctuations. And you can see going on the way up, like we were always kind of sitting in this 98%, 99, almost 100% range. That's like our normal in Austin. And then started to pick up over 100, 106, 111, right? We started seeing these higher numbers as the market, appreciated, and then came back down to closer to our norm, but we're still not there, right? So I think we get to this 99% pretty consistently. That's probably going to be a good indicator that we're back in our, humming along, pretty consistent appreciation Austin market. And our listing inventory barometer. So we think this is the best real-time stat so you can see what's going on. So if you're thinking of selling, you're thinking of buying, you can try to anticipate, should I do it right now? Should I wait? And what the trend we've been seeing, if you look at this 100% line, so anything over this line, any of these bars, that means that inventory is growing. There's more homes coming to market than there are homes selling. In these areas where it's below the line, you see the white, that means actually we were outselling the number of homes coming to market. So more sales. And so the trend over these this is going back to, what is this, back 2 years, Lee?
Yeah, same as the other charts.
So this is, each of these is a week. And over that period, it's mostly been that inventory is building. There was a slight change 2 weeks ago. You can see that here, 93%, so below 100. Lee, anything on this chart you want to point out?
I just think it's always interesting when the barometer dips under 100. And the week before Halloween there, the number of new listings hitting the market really took a dive down to 143. The pending sales were relatively stable at 153. And so you had a 93% coverage ratio. And that really just leads us into the next slide, David, which is really what is the net absolute situation with the listing inventory. So here you can see the same numbers in the first four columns that we've been looking at. You can see that 93% from a couple weeks ago. But then we factor in the number of expired and withdrawn listings in any given week. The final column all the way to the right, the net change, shows the weeks highlighted in yellow where the actual inventory due largely to the withdrawn and expired listings was a net decrease. And, the first week of November, the final week of October, first week of November, had the biggest drop of all at 140 fewer listings at the end of the week, largely because of these expired and withdrawn. So it's an efficient market when you have that sort of churn at the back end of the equation that's basically balancing out some of the supply and the demand. From my perspective, when I'm looking at market stability, I'm always looking at pricing. And so there's a lot of ways to measure the market. Obviously, stable pricing is really the number one thing that I like to see in a market. And as long as we've got a slightly declining absolute net inventory, it's going to be very hard for prices to slip. That's just one simple anecdotal way of looking at it, is that this is good news for pricing, and we'll see how it continues. But as you get into the end of the year, I think we're actually going to see a spike in expired withdrawn listings, particularly in December as well.
So is this that same chart, but taking into account the withdrawns?
Yeah, this is just a data visualization, as the kids say, of the numbers that we were looking at before. So anything below the zero is a net loss. You can see the numbers, and that's what it looks like.
Yeah, so it looks a little bit more even over the last couple of years when you take into account all the withdrawn listings. So that's interesting to see. And that's why, inventory has changed and fluctuated, but we're not sitting at 10 months of inventory right now. We're still in a healthy market at 4.5.
Right.
And so with the Fed dropping the rate a quarter point, people were expecting mortgage rates would hopefully come down. I think they're mostly just kind of sitting in the same range. I don't. We haven't seen any big change in mortgage rates, Lee.
No, haven't seen a big change. I think we'd all like to see this about 1 point lower, down just under 6 rather than just under 7. I know that some of the clients we're working with are watching this number fairly carefully, and we would hope that as we turn the corner on 2024, that the actual mortgage rates do begin to dip a little bit, and that would bode well for a strong spring, particularly here in the Austin market.
Well, it's good opportunity out there for buyers. Sellers, we sold one of our listings this week as well. So there's opportunities if you're a seller and you need to sell. Of course, we think, if you can wait until the new year, things will definitely pick up. And so that's probably the ideal, but people have life circumstances and they have to sell or move, and that's totally fine. And we're still getting traction on our listings and marketing in a way, knowing what's going on with the current climate and market. And then buyers, we think you can always just buy now, refi later. So if you can afford with the current rates, it's better to do that. And if rates come down, refi and save some money. So, Lee, anything you want to add before we wrap up?
Just reminded me of something a mortgage buddy of mine will say from time to time. Marry the house and date the rate. Does that make
Yeah.
sense?
Yep. All right. Well, thanks for joining us. If you want to be updated about future videos, go ahead and subscribe. If you got a lot out of this, share it with a friend and reach out if we can help you with anything related to real estate. Take
Thanks,
care.
everybody.